Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I've been a penny. I will buy the stock for a penny.
With everything that you need to start your trading day.
Good morning, everybody. Welcome to this Tuesday edition of Benzinga's Pre-Market Prep. Spencer Israel, as always, here with Joel Elconin and Dennis Dick. Had a bit of a rally yesterday, so we're going to talk about whether or not that can hold today or if we're just going to keep on selling every rally in its face. A couple of movers. We had some earnings to discuss, Stitch Fix and DSW this morning. We have some ratings. I want to talk about SMCI. And we have China, of course, is apparently reducing their auto tariffs, which we knew, and that is causing some upward movement this morning in auto stocks. Joel, tell us how we're doing overnight here in the S&Ps.
We're in the green here by 21.5 handles. Had a little dip overnight, got to 28.25. It rebounded on a dime here. Positive tariff talk. Rallied up to 69.50. Not much in there. I see a minor resistance point at 67 even, but not much up there. Thursday's close, believe it or not, is way up at 26.91. I don't think we're going to see that today, though. Crude in the green here by 65 cents at 51.65. Crude been in a bit of a trading range of late. Looking kind of tight here. Maybe a strangler. Maybe a straddle here because this is going to move out of this $51 area. Gold in the green by 210 at 1251.5. Kind of quiet rally here, holding 1250. Silver up by 12.5 cents at 14.73. And Bitcoin in the red by only $80. Talking futures here at 3,300. Have we cracked 3,000 yet? Let me see here. Nope, haven't cracked 3,000 yet, but that's the next milestone. We're going to have Joe Saluzzi on Friday's show and see if he's still super bearish, the virtual currency. Triple D, I think we're on opposite sides of the coin. Overall, not today. I know this rally's a little bit too much, but that was a good low yesterday. I mean, that was a solid low.
It was a turning point. There was a turning point, short-term turning point, and Apple was your tell. I mean, when Apple turned around, made the low, then closed green on the bad news, you could see it caught a bid right around lunchtime, noon, 165 to 169 in a matter of 20 minutes. That was the turning point. If you look at the S&Ps, you look at, the Qs, that's where they turned as well. We talked about Apple being the leader. It has been the leader. It's been the leader on the downside. Yesterday, it was the leader to the upside. That's what turned the overall market. So that's the good news. The bad news is the charts are all still broken. So I can't get my full bull hat on here and say, oh, yeah, now it's the time to load up the portfolio. I mean, if you're underinvested, now is not the time because we just rallied how many points? 500-600 points from the lows yesterday. Every time it seems like, you rip up 600-700 points. If you're buying at that point in time, you're doing it backwards because there's been multiple times, almost every single time in the last 3 months where they have punished you for chasing moves. You'd be chasing, I think, here today if you're buying it up here. That being said, some of these moves do get and they keep going. I mean, if you look back just 2 weeks ago there when we were down at 263 on the SPY, we ran for 5 consecutive days up to 280. We turned around and collapsed 3 days later. But at that, at the same time, there is just it's hard to chase moves. And it seems like if you wait long enough, you get a second chance. Sometimes it takes a few days. Sometimes it takes a week. But it seems like eventually you get a second chance with this market. And that's why I'm not chasing this morning's move, at least not my investment portfolio.
I have to totally agree with Spinner here. And I said this to Spencer. I gave young Spencer a ride in today. His car's in the shop here. And it was a halftime. It was CNBC. And it was Josh Brown.
What was said on CNBC?
I didn't have the volume on, but I knew they were.
Who has the volume on CNBC? No, just kidding.
I get my stock quotes on, on the ticker on the bottom to do my trades on. It was Josh Brown was talking. I know Kramer was talking, and they brought that stock up off the low. It was amazing.
They move stocks. I'm not gonna, there's nobody on CNBC that moves stocks more than Kramer. And when that's why I watch Mad Money, because he starts mentioning a stock, like bring up that stock. What was it all last night that he was talking about? Started with M, one of the new IPO that just came out 3 days ago. Do you remember Monero or something?
MRNS? Was it the one that had?
Was it MRNS? No, MNR. I can't remember now. It's a little biotech that just IPO'd 3 days ago.
Oh no, that wasn't
MDRA. Thank you, Griffin. MDRA. No, that's not it either. MNRA.
MNRA, I think.
The MNRA.
mRNA. There it is. Okay. There, everybody's got my back. Thanks, boys and girls. mRNA 2 days ago. Kramer started talking about this last night, and he said, "You've got my blessing." You know, he finished off. If you want to do speculative capital, you've got my blessing to buy this. Look where it's trading this morning. You could say there'll be like newspapers. Why isn't Moderna, MDR, or mRNA trading up 7% here? There must be some fundamental news. It was all Kramer. I watched it. Started at 19 and just kept going all the way up to 2050 just because he was pumping the stock. Started featuring and pumping it. He can move stocks. So that stock is up 7%. The headline is Jim Kramer mentioned it positively. That is why it's up 7% here this morning. Yeah. And the market helps it too. But not even, because last night this was trading up at 2050 and the market was down last night. So this is all Kramer.
Yeah, and I don't know what they were saying about Apple, but it was positive. You've just had a string of downgrades in it, and that 170. I mean, all those buyers at 170 that took the heat going to 164 and change. I think it went to 163. Are being rewarded today. Just real quick on this mRNA. There is a seller. You do have a little bit of resistance in the pre-market trading. I'll just give you the pre-market high. Pre-market high comes in at 2090, but there's 2090, 2077, 2079, 2080. So big seller here, just around 21. If you can, take a rally, take it up to the pre-market after hours and pre-market resistance.
Also, a spinner just mentioned, I wanted to make a point here. Splunk and TECD both were trading up too last night because of Kramer, and they were trading up slightly last night. One thing to consider is that when they say, and this is, just knowing how to play Mad Money, when they're advertised on Twitter that the CEO is going to be coming on, they mention it multiple times on CNBC, those don't get the pop that the other ones do that are just out of the blue, that, that he didn't, pre-advertise. So, CNBC was, pumping it all day that the Splunk CEO and the TECD CEO were going to be on CNBC. So they get a little lift. But I mean, a lot of that might have been intraday too. Sometimes they say they're going to be on and they actually move intraday already. But when you're watching Mad Money, he mentions a stock out of the blue, it goes.
And you're active in that, huh?
You gotta watch them, because it's all just information, right? I mean, I trade on information. That's why I have, all of my news sources. I've got all of my scanners. You've got to be informed, especially if you're trading after hours. If you're trading intraday, 90% of the news comes out after hours. But if you're trading after hours, you've got to have the information of what's going on. And CNBC moves stocks. It's very important as an after hours trader to watch Fast Money, to watch Mad Money, because if they mention stuff positively on that show, they will move stocks. But it's funny, you can tell when you're really in this huge bull market versus a bear market. It's completely different right now, because it used to be like on Fast Money, somebody would, pitch a stock and the stock would go up 2-3% because they have so many retail traders coming in and buying the stock after hours because, somebody liked it on CNBC. Well, now actually you hardly see these things move on some of these pitches, because there's been so many people who have been burned here lately. They're not chasing these stocks, and they're not, watching obviously as much as they did. Jim Kramer always moves stocks. He always has. He's the most powerful one of, all the regular hosts on CNBC. That I would go out and say there's nobody more powerful than Jim Kramer. Obviously they get some guests, and some of the guests are going to be more powerful, but of the hosts, Jim Kramer moves stocks, unless it's David Faber, who David Faber comes on and actually breaks news. So if he's breaking news, that'll move stocks too. But just of opinions, of people having an opinion on a stock, Kramer is worth the most.
All right. Do you try and, I don't know if you want to answer this. Do you try and do your stat arb for comments like that? Or
there's nothing to do with stat arb. That's just pure arbitrage. And I typically fade the moves. So if something gets mentioned positive, not some of these smaller stocks like mRNA, who knows? But sometimes, he'll mention a bigger company and it'll move up 1% on it. And we know, Joel, it takes a lot of stock. Like if somebody mentions G positively, it moves up 1% because somebody mentioned it. And maybe it's not a good example anymore because 1% on G is only 7 cents. But back in the day when it was like, it would move 25, 30 cents, I would typically fade those moves. So nothing against the commentator, but it's just the fact that it's a thick stock. Probably when the stock reopens at 9:30 and 9:40 in the regular trading session, probably not going to have as much oomph as it does after hours when the liquidity is lower.
Dennis,
so I typically fade the move.
I feel like Dennis could write a book about how to trade fast mad money.
That's why it was a big deal, to try to get these few seconds knocked off too. So, when you're watching fast money or mad money and it's delayed by 14 seconds, it's an issue. But, apparently I can't find anybody that's getting it faster than under 11. So apparently, with all the satellite stuff going on, I was talking to my one friend and he's like, the satellite feed goes up from CNBC, gets descrambled, comes down, then it goes up from your internet provider, from your Comcast or whatever you're using, and gets scrambled there too. So he's like, it's going up and down a couple of times before it gets to your TV using the satellites. He's like, that takes time.
Yeah.
Now, does it take 14 seconds? Probably not. So, but there's a little delay sometimes maybe on CNBC intentionally too, because is there a delay on CNBC? Maybe not. Like for cussing and stuff? No, actually, because Icon cussed on it before, so maybe there isn't. Anyways,
you cursed on CNBC.
Did I curse on CNBC?
Is that what you?
Icon.
Is that what? Icon. Oh,
remember? Yeah, I was just thinking
I heard
in my head, maybe there's a delay for 3 or 4 seconds so they can catch if somebody cusses, but that's not the case because remember, Icon was dropping some major words there, and that did not get bleeped out.
Yeah, you cussed on our show once too. I haven't.
Stop talking about that.
Kenny Glick, he's got the record though.
You gotta watch Kenny Glick. Wait, you gotta be fast on the button on Kenny Glick. He's got a little bit of a potty mouth sometimes.
Hey,
Kenny, if you're listening, we love you.
Dennis, question from the YouTube chat: is there a particular stock that you look for as maybe the tell for when the market might turn? The person is referring to Square, but is there one?
Changes all the time. Apple has been the leader right now.
Okay.
So Apple, even if you don't trade Apple, you got to keep it on your screen because it's been the leader, and it turned yesterday on the bad news from Qualcomm, closed positive. That was a tell for the market. So it changes all the time. It's about identifying who is your current leader. Sometimes it's just a big earnings stock. It could be like a major company that reported earnings. A lot of times in earnings season, it is. If Amazon's reporting earnings, it's probably going to be the leader of the whole market. If it turns around, starts going south, it's going to go down. When Facebook reported the disappointing quarter, it brought the whole market down with it. So the leader changes all the time, depending on, what is on the calendar, depending on random news. But it's very, very, very important to know these things.
Okay, let's do some earnings stocks, Spencer.
All right, a couple, only 2 or so notable ones this morning. We'll start with DSW. They're reporting this morning here a Q3 adjusted EPS of 70 cents versus a 51 cent estimate. Sales of 833 versus $794 million. So good beats for the Q3 EPS and sales. They also raised their fiscal year EPS guidance by 10 cents from $1.60 to $1.70 on the low end of the range. The Q4 guidance they gave was a little bit light, but a fiscal year guidance raise and a Q3 beat for DSW.
Some of these smaller retailers have been doing well off their earnings reports, and I don't want to be short any of these smaller retailers going in. The multiples are low. The P multiples are low. The thing got killed going into the numbers. A lot of things were going to work in its favor. If it reported anything okay, it was probably going to rally on this. And that's the important thing to consider when you're trading stocks is, you've got to know, what's the sentiment towards the stock going in. A lot of the stocks with the lower PEs have held up a lot better. We've obviously turned, from this full-on Momo buy every stock with 100 PE to a little more defensive. And they like the stocks with the lower multiples to a certain extent. I mean, they were hitting everything a couple of days ago. But that's, what you've got to be aware of. And when the stock gets hit going into the report, and if you look at the last 4 days, it was $28, then it was 26, then it was 24. It closed $23.13. Basically, the last 25% going into the report. All the bad news is priced in to a certain extent. So, I mean, unless they completely, for lack of a better word, SHI blank the bed, this stock is probably going to rally on the report. And that's what DSW did.
And let's see here. DSW got a pop all the way up to 27.50. And we started to fade. Actually, 27 160 is your pre-market high. I do not like the fact that we are $1, almost $2 off that. So I think you will find sellers if, again, you can reapproach that 27.50 level. Longer term for this thing, it's not even near out of the woods until it could clear 28.50. There were a couple highs last week at 28.50, 28.50. In that area, capped it at the beginning of November. So not chasing it up 267. I don't know. I might be patient. I don't know if you're going to get it back down to a gap fill at 24.23, but definitely some overhead supply here. I'd look at a resistance at the pre-market high.
And then the exact opposite, in which I think you were going to go to their SFIX from last night. Give us those numbers there, and this is the exact opposite story of DSW.
Yep, and we'll tell you why. Even though the report was good, the Q1 EPS 10 cents versus 3 cents, and sales of $366 for $357 million. So a beat on both for Q3. The Q2 sales guidance was in line. The fiscal year sales guidance was also in line. So no bad news anywhere on the surface of that report. But Dennis and Joel, why is it down the way it is?
Because this stock is the exact opposite. They're not buying these high multiple stocks like they were before. Think about, everybody who's bought this thing is underwater, major resistance. I mean, all those smaller Momo stocks that were, the hot thing for the better part of all of 2018. I mean, if you look at Stitch Fix, had a pretty good summer, went from $19 all the way up to $52. These former Momos are all broken. So every time you get a little bit of a rally in them, there's willing sellers. We call that overhead supply. Just a ton of overhead supply. Props to my buddy up right there last night, because this thing was up at $28, and he's like, how long is it going to take to give this back? He's like, I highly doubt that any of this rally holds. And I think he probably made some money with it on the short side, and obviously it's trading down now 17%. So wish I would have shorted along with him. I did not. I was doing other things and did not trade it. Wish I would have. But how high did this get? I saw the 28s. Did it even get higher than that?
It got to 29.40 on the number.
Wow.
And some volume.
And now it's 21.40. That's
Ouch.
Not a typo. $8. This is off the after hours highs. Stock's broken. This is broken. Every rally you get in this thing, I think, in my opinion, is going to be sellers. So can you rally back up? Can you bounce off the recent low that you got down to 22.51? Were you below that too?
I know.
I don't know. Stock's broken. It's got a ridiculously high PE multiple, and the growth is slowing, or at least, maybe it's not growing as much as everybody had hoped for.
I'm not asking you. I'm asking Spencer. What do they do? Stitch Fix. Do they fix stitches?
You should know. We talked about this last quarter. I feel like
it's not online presence.
It's like a service you can like subscribe to it and get clothes delivered to you, and then and then you try them on and you don't like it, you
send them back.
Send them
really?
Back. I feel like is that not?
I don't know. I mean,
we discussed
it's an online clothing store.
Yeah,
it's
a service.
If you want to just start to call it cute, it's an online clothing.
It's a service that you subscribe to when you get clothes sent to you, and then you can send it back. And it's like they use like algorithms to figure out your wardrobe and what you like. But you're right, Dennis. And it's an online.
Is it cheap? Do they have cheap stuff?
Well, you pay a subscription also on it. So like. Yeah,
I wish I would have known that. I tried to buy it after the last earnings play, just at a dip, and it was not a great trade. I lost a little bit of money on it. If I would have done a little research on it, I would have. I don't know. Well, we're looking at the pre-market lows here. Pre-market low is 21.12, the old Rush album here. So you're finding some support just above 21. 22.51 was the old low of the move. I use that as resistance, and I'm seeing some weekly lows, a lot of weekly lows around 18. I don't know. I just use half and whole numbers if you're trying to short. If you're trying to long, I don't know. Let this thing settle down for a little bit.
No interest in me from the long side here, and I'm a seller rip. So if the thing rips back up $3-4 for whatever reason, I think I'd play it from the short side.
Yeah.
Bearish. Got my Stitch Fix bearish hat on, although I'm not selling it when it's down 17%. That's called chasing it on the short side. So, sell rips, buy dips. That's how this market, that's not even how this market works. That's how all markets work. Like, that's how I trade even intraday. When I'm bearish a stock, I wait for a rally to sell. When I'm bullish a stock, I wait for a dip to buy. That's kind of how I've always worked. At least that's the way I trade. And that's the way I've traded successfully for 19 years, but profitable every single one of those years.
All right, what else we got here? We're at 820. SPOOs are still up near the pre-market high of 69.50, trading up 23 handles at 26.66.
I have one I want to discuss. This is my bullish call for the day, for the week, actually. SMCI, Super Microcomputer. If you remember all the way back, it was, I want to say, October 4th, when Bloomberg came out with a big investigation saying this SMCI makes servers, and they came out and said that China had inserted little chips into these servers that had compromised their security. And the stock in one day went from 22, it hit a low, I think, of 8, closed at $12 that day. So it got almost cut in half in one day. It's been slowly come back since then. This morning, they came out, SMCI sent a letter to their customers saying that a third-party investigation found no evidence of malicious hardware on the company's motherboards. There have been no trades yet this morning, but I see no reason why this can go back to 22 where it was prior to that big gap down.
This is over the counter, isn't it?
Yeah. Yeah, it is.
Is it?
What's the symbol on it again?
SMCI? Oh, it is OTC. You're right.
Yeah.
So it's not going to have a pre-market. So it'll trade again here at 9:30. I don't follow this coming out. I don't trade bulletin board stocks at all. Probably because I'm pre-market after hours. There is no market in these things, pre-market after hours. But even, it's just a liquidity thing. I don't like trading over the counter stuff. So I like more liquid stuff. So I don't follow the story at all. So I'll limit my comments.
I don't trade it either. I would just say I wouldn't be chasing it, but if it could come back down to the close and the high, you had two highs, 16.45 and 16.35. So if it comes back down to that area, what Spencer's referring to is the gap all the way up to 21.35. So boom, that's where your resistance is in SMCI.
Jump over back to the earnings parade here. We had AEO report earnings last night. This morning, AEO, American Eagle. What do you got for me, Spencer?
I don't think it's out yet. Are they out yet?
Maybe they're not. I don't see much movement. They're on the they on your calendar?
Yes, but I didn't.
They're on my calendar too. I'm just checking. No, I think you're right. I don't think it's out yet.
No, I don't think they're out yet either.
All right, so we're waiting on American Eagle Outfitters. Joel, give us a preview.
Well, you tried to make or test the low of the move yesterday at 18.51. That was the low of the move. You only got to 18.91, got a little bit of a bounce. Light volume and pre-market. If things really get going to the upside, 21.45 is my resistance on the upside. Oh. These are your 4 and 5 day highs. Coming back on the downside, looks like you got a buyer under 19 from yesterday.
AEO is after the bell. That's why.
After the bell?
It's after the bell. That's okay. Okay, so it's coming out after the bell.
Yep.
Also coming out after the bell is Play from Dave & Buster's too. So I have to keep an eye on that one as well. That could be moving. What else? Anything else really? Earnings? Casey I saw last night. CASY. It was getting hit a little bit.
Okay, we can go to Casey. Just give us. There's really not much in earnings land today, but Casey was last night. Q2 EPS of $1.80 versus $1.56. Sales of 2.5 versus $2.54 billion. So in line, slight miss on the sales, but a beat on the EPS. What did they do? They cut their fiscal year comp guidance for their fuel segment by about 1%. And for their other units, the grocery and the prepared foods units, they reaffirmed those comp guidance. So nothing really too bad from that report. Just the fuel segment, they say, is going to be lower, but the rest of the business seems okay.
Was trading down last night into the 110 handle. It's bounced. It's 112.50 here bid right now. It's thinner. Joel, quick technicals.
Let's see here. This is ugly. You got a pre-market low at 109.47, and you just kind of been creeping higher here. You have not been in this area since August of this year when you had a 110.43 low. So if we go back to reverse, I do like that $110 area. Very ugly. 1, 2, 3, 4 days going into this. So good opportunity for shorts here to cover. And I think that's what you found here when you hit that pre-market low. Long ways to go to fill the gap from yesterday. You need to get all the way up to 1845. So be a little bit more of a seller on dips. Absolutely no idea where to sell this on an intraday rip.
There's a ton of ratings here today. A couple notable ones because they're bigger caps. AT&T catching an upgrade, and Pfizer catching a downgrade.
Let me do the upgrades and downgrades with Spencer here, and then we'll.
Yeah, go ahead. Okay, we'll come back there because I've got to actually leave early. I've got something going on. Plus, I've got a ton of trades here, so I'm going to stick with you for another 5 minutes. If you guys got a question for me, let me know. I'll take you through the imbalances at 8:30, and I'm going to have to hop there too. Just going back. And I had a lot of ratings here, so I'm going to move away from the ratings for a second. Let's go to Apple because it was your leader yesterday, and we didn't break down the technicals on it. We get some follow through here, Joel. So obviously stock trading higher here again, 170, 160. What are your thoughts here on Apple? Did it put in a bottom yesterday, 163.33? I think it did in short term because of the turn. But what are your thoughts here? Do you think the Apple bottom is in?
Yes. And I think the bottom's in the market, too. I think we're going to...
Whoa. There's a big, bold call. Look at Joel. You got the bull hat on?
I do.
Do you have your bull hat on right now? We got to get hats. We need hats for Christmas, Spencer. Benzinga, we need hats for Christmas. We need the bull hat on, and a bear hat on. And then they wouldn't even have to listen to us talk. They can just look if we have a bull hat on or a bear hat on. Me, you, and Spencer all wear bull hats when we're bullish and bear hats. And then when it's all mixed, then it gets interesting. But that would be interesting. We need hats.
I just think that they just washed people out yesterday, and besides that, you had big buyers at 170 before that, and the people that were buying there weren't just buying for a scalp. You don't know if Warren is messing around. He was talking against his book, but this was up earlier. And you just have not really had a meaningful retracement. I mean, how can I talk fundamentals about this? I'm just talking technicals here. You went from 230, and I said this before, so egg on my face, but 233 to 163. What's that? A 70-point move in Apple? I mean, come on. 35 points of that. What takes you? Still keep coming back to the $198, $200 level. I mean, this thing's just been beat up. It's been a lot of downgrades and everything, and how bad the iPhone sales are going to be. And I don't know. That was a good bottom yesterday, and people that did cover their shorts in it now are what, $8-9 off the low. I mean, there's going to be a lot of backing and filling here. You never know that 170. And then for the overall market, like when the market opens up, 50, 60 handles like we did last week, institutions are not going to chase things up there. And maybe they're not going to sell their positions, but they're going to wait. And I think you had some big institutional buying in there yesterday. You had the shorts going all in when you broke the October 29th low of 26.03. And I just think we've been in a trading range, and they really scared us yesterday, saying, "Hey, we're going to break out. We're going to go to the bottom. We're going for 2,500." And I just think the market likes to frustrate the most people, and it
really does.
And we've been in a trading.
It's been tough.
Yeah.
I mean, I thought the bottom was in last time when we bottomed in the middle of November. We had the rip your face off rally, and I looked pretty good with that call for a while, but then we turned around and made a new low again. So I don't know. I'm just at the point where I'm the fade trader. And, when I'm seeing us rip up 700-800 points, I'm a net seller. When I'm seeing us sell off 700-800 points, I'm a net buyer. That's how I'm playing this market, not trying to call where we're going to be a week from now or 2 weeks from now, because I think it's impossible in this market. It's just too headline driven. We don't know what the next headline is going to be. But, you get momentum going for a couple of days, you can play. You get momentum going the other way, you can play. But it seems like it turns. And if you can identify those turns, and the turn was yesterday at noon, whether it was, Josh Brown as a catalyst, on CNBC, that's a lot to say, or, whether it was just the fact that the sellers just got tired in Apple and buyers decided to come in. Apple was the turning point for the market yesterday, and it's a short-term turning point here for the markets over the course of the next, few days maybe. But, does it continue, or do we get another headline, on something True. Negative, yep. Macro headline that drives us back down? Who knows? We can't. It's impossible to predict this market a week out.
I'm just thinking,
at least right now.
I'm just thinking like the maximum pain, and I'm thinking for bulls and for bears, right? And basically, we've been trading in a range here, and I'll go to the weeklies and the monthlies. We'll give it to, but man, 2,600 to 2,800. We've done that round trip here several times. So the bears want us to break through 2,600, go test 2,500. The bulls want us to blast back up to 2,800 in the all-time highs, and we've had 3-4 weekly highs. So I just like, if the market ends the year at 2,700, which is only 30 handles for here, then the bears will be frustrated and the bulls will be frustrated, right? And everyone in between. So that's just kind of, I mean, I didn't expect we would pop up this close to it today, but I get numbers stuck in my head, and just for some reason, that's where I think the SPOOs are going to end of the year. Could be much higher, much lower, but that was my thinking yesterday when it broke into the 25 handle. And when, if we get up to 2,800 too quickly, then, I'll fade it. But Dennis, give us the imbalances and then we'll do a few things.
Small GE 247,000 to sell. We know we see that one every morning. AT&T 150,000 to sell. That's interesting because AT&T has an upgrade, which I teased a little while ago. So AT&T giving back a little bit. It was just trading 30 and a quarter. That big sell bounce came out, just knocked 10 cents off the price. Pfizer 70,000 to sell. It got downgraded today, so it's not surprising it has a sell rating. Remember, TLT is trading down. That's not good for your utilities. That's not good for your more defensive stocks. Sometimes those can actually get hit. Procter & Gamble is trading slightly in the red here right now, down 36,000, or it's got 36,000 to sell. Alibaba is up $4. That thing is wild, man. It's got 40,000 to buy here this morning. So a lot of movement here. Obviously, volatility is still elevated. I'm not going to say I think the bottom in the overall market is in, but I think there's a short-term bottom that, I think you're going to have that buy the dip trader coming back in here now. So now I look for dips to buy, but I'm also looking for rips to sell too. So I'm just got the full fade trade on everything right now.
Yeah, a lot of the trading range. All right.
You ain't fading, you ain't trading. That's what they used to say. Anyways, I got to go, guys, because I got a ton of positions. I was taking you through. Nick Chahine, if you want to call him early, I think he's ready. He's in the chat. It's 8:32. So Nick and Joel and Spencer are going to take you through the last 30 minutes. I'll be back with you tomorrow. So we'll talk to you guys in a few tomorrow morning. At least I will.
All right. We will do a couple ratings. Dennis mentioned the AT&T rating, and this is one of those ones you got to watch. So you always got to, read the tea leaves of these analyst ratings here. And I want to highlight AT&T specifically because there is sort of a trend when you see a lot of analysts gang up on one side of the stock, whether it be upgrades or downgrades, buys or sells, then they tend not to mean as much. And AT&T is sort of the embodiment of that this morning. They are getting upgraded from Citigroup to buy, and they announced a $34 price target on AT&T. But this is now the fourth upgrade to AT&T dating back to November 26th. And on that day, the 26th, it did close higher. It closed higher the 26th, 27th, and 28th, I believe. It did. And then we had upgrades on two upgrades on December 3rd and another one this morning. So we've had MoffettNathanson, JP Morgan, Cowen, and Citi all upgrade AT&T in the last 2 weeks or so. So you're not seeing as much follow through. You wouldn't see that much follow through in that this morning just because this is the story now. This is the trend. Yeah,
you know what? I think when you talk about the fade, we say analysts chase price and stuff here. This is like a really a safe call here, right? The stock is, sold off, been in a downtrend, pays a high, pays a great dividend. I just don't think there's a lot of risk here. I mean, obviously it could take out the low of the move, but this has kind of been in a trading range too. It dips to the 29.50 area. Then you had the rip last week with the rest of the market closed 32, but I don't mind this one. I'm not going to be chasing it here. I think the more I get, the more emphasis I put is when these stocks have these huge runs and everyone and all of it. Oh, we're changing our price target in Amazon, for the 2,000, 2,500, 20. I'm going to do 3,000. I think those are more the analysts chasing price, and when they keep raising their targets when the stock is rallying, to me, it's more of a fade. The same thing kind of happened with Square. But this, I mean, like I said, it's a safe play. Not going to chase it up. What's yesterday's high in this thing? Yesterday's high is 30.09 here. So maybe on a gap fill or $30 would be a nice round number. You're not going to see that 29.17 low from yesterday unless the market really really goes into reverse. But don't mind this one. Safe stock. If you're looking for more of a target on the upside, your 3-day high comes in at 30.56, and I'm sorry. 2-day high is way up at 30.88. So not much in here on the upside. What I was going to say, Friday's close, Thursday's close. Man, this thing really messed me up with
the day off.
That day off.
Yeah.
Holy mackerel.
Yeah.
Let me see here. That was Thursday's close. If you're looking for another resistance point at 30.53, another leg up here in the S&Ps. We just made a new high here at 26.70.50, up 27.50. Maybe we'll hit my 2,700 target today.
I would say unlikely. And I'm bringing in Nick on right now. Nick joins us every Tuesday. Nick Chahine. He is the author of
Yes,
That's
sir.
Create Income with Option Spreads and sellspreads.com. Nick, how's it going today?
Going well. Let me close my window here. Okay.
Are we feeling bullish? We feeling bearish? We're feeling bullish, aren't we? I feel
Nick's
it.
Well,
I won't say always bullish, but go ahead.
we took long positions in Apple yesterday, about 7 or 8 minutes before they did the segment on CNBC. And I took February calls in full force because of what I was seeing and hearing. And my theory on this was there's no way the Chinese are talking too nice to let that Apple ban iPhone fly, because that'll put a wrench into the tariffs. There's too much to lose on all sides, and I believe they will come to terms, whatever those boring terms may turn out to be. It's not going to be earth-shattering. But I made a bet, and 7 minutes later, Josh Brown comes out and postulates that it's going to go higher, and the whole market bought it up.
Amazing?
I was like, thank you very much. I sold calls for this week against them, so when those die, I'm long almost free Apple into February. So those are the bets you make if you do homework. You guys were talking about sentiment and this year ups and downs, and sell the rips. One rip that's selling the rip that's happening that nobody's talking about is the VIX. 25.94 was exactly the same spike high a few days ago. And the same day it turns around and closes like almost $2, maybe more lower in the same day. So they're selling the fear rips too. So there are no bears. These are just bulls that are just rolling profits from one place to another. And that's why we're seeing this whipsaw. That's my thesis, and that's how I'm trading. So Iron Condor selling is working best in this market.
Nick, what VIX, what symbol do you look at for that?
The VIX, the VIX or the VXX. The VXX is a better tell intraday for me. Or the VIX futures, which depends on the platform. For me, it's /VX in Thinkorswim. But the regular VIX that everybody looks at, 25.94, I think, was the high. And same day, yesterday, the high of the day was to the penny, same exact high. And then boom, complete failure on the same day, even when the rhetoric was so bad. So they're selling the rips in the stocks, but they're selling the rips in the VIX, which is fear.
Nick, Spinner wants to know, did you actually buy calls or did you sell puts?
No, I bought calls, and I did share selling puts the day before.
Ooh.
So if or 2 days before. So if somebody sold those puts, they would have probably said, "What are you doing?" Well, I said, if somebody wants to own Apple at 160, I forget the level, I said you can sell it. It was like $9 for the put. It was just insanity. So I wanted to sell the put, and I said, you know what? I want to do the call, straight up calls, an early earnings trade. So I bought the calls with conviction, but it was a bet that sentiment was too far gone. And here's the thing about Apple. You remember the crazy call before the split of 1111? That was $5 below yesterday's low. So remember, one guy came out and said, I'll put a target on an Apple. It was like 700 or something. And he said 1111. And that's 158, I think, or if you divide it by 7, do the math. Air math tells me it's like 158, I think. So it's about $5 below yesterday's low.
Yeah.
And Apple's overdone. And if I can't bet on perceivably the best company on the planet, then who am I going to bet on?
Okay. All right. So what do you do with this move here in the S&Ps? We're up 29 handles. If you weren't buying yesterday here and you don't want to chase up at these levels, I mean, Now we're almost 100 points off the low from yesterday at 25.83.
Okay.
What's your plan?
I would chase it. I would chase it, and with caution, because the options allow you to do that, and that's a gift as opposed to having to buy something at a high premium. You can invest literally hundreds of dollars in order to make a long bet. So this is a pivot point, but the levels all come back together. So we're coming back into a range that we had traded and we've fallen out of recently on no new head. So last week we had the funky off day. I think it broke something.
Did that mess with you? I mean, just
it broke something.
Yeah.
If you look at the DIA intraday, I forget what day it was. I posted it like 600 times. There was one candle that was like 5 million shares. Nobody talks about it. Right in the middle of the day, out of nowhere, boom, 5 million shares. And then the market fell apart like minutes thereafter. Something happened. It was around the Brexit. There may have been a currency thing, a bond thing, the yield inversion. That was the day where the yield inversion curve went gapped lower. So something happened. I don't know what it is. Nothing has changed in the fundamentals. Absolutely nothing. It's just sentiment. So it's hard to trade sentiment unless you have to make bets. And otherwise, you just trade the chart completely and nothing but the chart. So I had puts, protective puts, but I also was betting on the upside. And I was selling short-term ranges. And the good thing to do with that, if you know your levels, the SPY offers 50-cent wide trades. So it's so easy to throw in an iron condor there and risk 25 cents really if you sell both sides. So I bet you anything that we're going to go higher from here. We just need a little nudge here and there with the headlines.
Yeah, and true. That's true. Nick, let's talk about execution a little bit here. Now, do you go in? I can't imagine you going in at the market. Do you kind of look at the spread? Because I know you trade some really liquid stuff and some illiquid stuff. Just from a execution standpoint, do you just look at it, and if it's 30 bid at 50 and you want to buy or sell, you go 40 in the middle? Do you work the edges? How do you work orders in let's say the not so liquid options markets?
I usually go for the middle. Okay. And the ones that are not so liquid, you have to give up a penny or two. So, and there are some that give you false middles. Ulta comes to mind. The old price line used to do that. I haven't traded booking much lately, but I imagine it does that, where you see a price and you say that doesn't make sense. So if I'm trying to sell something and it's showing $1, I usually ask for a lot more, and I leave it, let it sit to see if it trues up a little bit. And if I look at the whole chain to see if it makes sense. So if you're going one leg lower, one leg lower.
News here. What is going on here? We are continuing to. Sorry to interrupt you, Nick. We are just ripping higher. I guess
they must be listening to your show and hearing my words and just buying.
Now, it's a rarity when you catch me on the bull side here, but here, wow, we're ripping. I said there was nothing up to Thursday's close at 26.91. I didn't think we'd see it, Spencer.
Nothing really. 20 minutes ago, Trump tweeted a tease about China announcements, but we already got that overnight. We got that the headline that they're going to reduce the tariffs as we found out from the end of the conference there a few weeks ago, G20. So that wasn't new news, but he's teasing more news this morning. So I don't know what it could be, but I think that's our catalyst here.
Michael Pellini says Kramer said buy the SPY.
Oh yeah,
I don't have that on. But Nick, you just before we get to a symbol here, you said SPX smells like the end of 2015. Spencer will pull that chart up and give us your detailed explanation.
Well, there's not much detail as opposed to a theory. So this is a helicopter thesis that I haven't shared with anyone except for friends in the chat room this morning. I was going to do a video on it. So at the end of 2015, oil was going to zero. I put that in quotes. Everybody believed it was going to zero. Pretty much, they're starting to talk, low 20s and whatever. And that was it took the whole market with it, because the perception was that if there's no demand on oil, we're going into a terrible economy. And then, boom, 2016 came about, and we had a rip-roaring rally. And at the time, it started to look like a head and shoulder. The markets were testing a neckline that, if broken, will carry about 100 points or more lower. Almost exactly the same setup as we have now. We have rhetoric based on speculation that the world's going to fall apart because of tariff talks between two nations. Or three, or two nations and another continent. So, and also the inversion of the yield curve. My bet is that none of those three people involved, Powell, the Fed, will not invert the curve on purpose, will do all its darndest to stop it from inverting. And President Trump and Xi both have too much to lose, and they both have big egos that they want to save, face with their nations, that they will come to a term that's boring and will have no absolute loser, and everybody will be happy with the outcome that, hey, the headline is gone, let's just move on. And if that happens, I bet you we could have the same rally we had in 2016. And everybody that's selling the rips now is going to have a giant blindside. Now, this is not a fact. This is my bet on this macro helicopter thesis.
Okay, I have to agree with you, and I wish it wouldn't go so fast. I just, these big up moves. I mean, I don't like, fading them at this point. But let's move on to some stocks. And Nick, I got a tough one for you here. You ready?
Yeah.
Pizza, PZZA, Papa John's Pizza. Oh, we're getting, the founder gets them in all kinds of trouble. Then they're supposedly going private buyouts. Oh, let's take it to 60. Those don't materialize. Back here, not quite at the lows of the moves. You doing any sniper put sells in this one, or are you waiting?
No, sir. Because my son, who was 16 at the time, worked at one of their stores. It was a franchise store. I couldn't believe the mess that store was. So I thought that if a corporate allows this store to exist, as a corporate I don't want to sell puts into. It was horrendous. And I used to plan for 400 restaurants. I used to do their planning. I was like, I can't believe, he would come in and tell me stories like, what? They did what? They do what? The procedure is what? And I was like, I couldn't believe it. So regardless, it is technically in a threat. And the market may save it by its action. But if you're talking about head and shoulders, there is a neckline just below here. Well, not just below, but below the lows. Let's put it that way. It's not a hard line in the sand because they have tails. So it depends on where if you're using a crayon, big marker, it's not gonna matter. Anywhere below 40 could trigger, I don't know, a $20 drop based on the chart itself. I'm not calling it down there. Obviously, it should have support from the volume profile, but I don't know what's going on. And if a technician is looking at a chart, they might say, okay, there's a giant head and shoulders that, if broken, may have a lot more carry through. So that is not one. It's not a put I want to sell.
There was, let's see, where do we get to here? The lows of the move, boy, we're right back down here, 46.25. Those are some lows that you had back at the end of October. So keep an eye on.
To be honest, if you want to evaluate the downside on this one, you have to look at the monthly chart. I posted it earlier, a weekly chart, and here's a monthly chart because it really shows you what's below. On a weekly chart, you don't see anything below 40, whatever, 36 or whatever.
My bad on that one. Okay, let's move over here. Jazz has a couple stocks to look at. One of my favorite places to shop, Costco here, trading up $1.66. Boy, I'll tell you, if this ever gets, I could just number popping at me, 234. That's your super extra major resistance. We're a ways from that. What's your take on Costco?
I love the company. I go there once a week.
It's
almost like, yeah, I do. It's really close, and I just enjoy going there. I run into a whole bunch of people I know. It's amazing.
It's a social event.
That's Nick's social life.
It's a social call.
You know why else he goes there? Those dollar hot dogs. Have you ever seen those dollar hot dogs?
That's a great deal. You can't beat that. And a soda. So technically, it's not looking good because it has a head and shoulder, and if it loses the 216-ish. It could drop to like 208. but this is a put I'd sell. Now there's a little pointy part on 195. That should be solid floor, regardless of what happens. And that would be a little bit lower than the target of the Head and Shoulders. I didn't post the chart. So anyway, I love the company. The fundamentals are good. They're proven performers, and they have combated with Walmart, so they know how to battle on margins. And Amazon is all about margins. So I think all three of these can exist happily together.
And the subscribers, they got that recurring revenue from the subscriptions. Yep. And also
does Amazon, by the way.
Yep. Amazon Prime. And they also have the onion grinder, to put on your hot dogs. You just crank that thing and the onions come out. I mean,
I don't go there.
All right. How about Caterpillar?
Okay, the caveat there is the Chinese tariffs. So part of the helicopter trade I would do, you have to bet on something going up. And the Dow, the DIA, which includes CAT, Boeing, UTX, and all those guys, they're at a disadvantage right now. And talk about selling the rips, they're like in the line of fire of that. So I don't care how much you love the fundamentals, it's in so much headline threat right here and so violent. I've had terrible timing for myself. I've made better bets for other people, but for myself, I've had terrible timing. So I'm not sure I'm the right guy to ask about when to go in and go out. So fundamentally, one can argue whatever they want to argue about it, but the headline thread here tells me that there are easier ways to trade it. If it's rallying, the whole market is rallying. So I'd rather bet on the SPY than specifically on CAT, because I don't have as much China exposure. The PE is like 12 or something like that. So that's pretty cheap. So from that standpoint, if somebody wants to own it for years on out, fine. But I'd rather bet on something else that doesn't have so much direct relation to China.
What's interesting in this one here is that if you were holding out for the October lows, and what did you do? You put in a quad bottom there between 112 and 113. You didn't even get, it showed excellent relative strength yesterday as the S&Ps went 20 handles below that low, and this came nowhere near that 112 low. 120 had been the level. Now, man, 127 up 361. I mean, I see a little bit of resistance at 130 if you're looking at a target today, but man, oh man, excellent relative strength on the decline yesterday, and you're right. A lot of this is, really all tied to the tariffs. I want to talk about oil, Nick, because I don't know. I missed the break, and I've been thinking of buying it since like 65 here. And to me, this is really a quiet consolidation here. You've been in a trading range between the low of the move. What's the low of the move? 49.41. And let's just call it 54.5, 55 here. I think it's going to break out one way or another, and I'm kind of leaning towards the upside here just for some quarter retracement. Talk me into it, talk me out of it, give me a possible strategy on the long side.
Okay, so I don't know if you remember when everybody loved oil, I said oil should be in the mid-50s at best, because anything higher affects OPEC market share, but anything much lower affects their pocketbook. So if you're starting to short oil here, I think you're making a mistake. It has a lot of support from here on down to $5-6 from here. So if I wanted to sell puts in the USO, this is the time I would do it. If I wanted to buy calls in the USO, I'm not so sure I would want to do it, because I don't want to rally it up to 60 or 70, because I don't think it belongs up there just based on demand alone. It was a matter of rhetoric and OPEC now, I guess it's called the ROPEC because Russia is in there now unofficially. So from the short-term perspective, it's just a betting game. And I don't think anybody has any edge unless they have a seat on the OPEC table. That's my opinion. So technically speaking, on the daily, it's really tight. So something has to give. It is the range has set lower highs and higher lows, not very positive higher lows, but it is tight. It's like a fish mouth almost. So here's crude, and something has got to give, like you said, up or down. but more likely up than down, in my opinion. And it depends on the dollar. So if the US dollar is overextended at these levels and it falls, then it might leave room for all the commodities, oil, even gold, silver, and all of that stuff to rally, because the higher the dollar goes, all the commodities, there's downside pressure on the commodities, including oil. So if you know your dollar trade, then you can time your oil upside bet. Maybe you can combine both and bet on oil companies. So I don't know, Schlumberger is in there, maybe not. Maybe oil like Exxon, Chevron, etc.
Yeah. We'll do two more stocks here. Rob Hood wants your thoughts on Dick's Sporting Goods. And to me, this 37.60 level is huge, and closed at 37. But I see 3-4 highs in that area. That's the major resistance. That's what you need to get back heading towards that $40 level. Any thoughts on Dick's Sporting Goods? And do you go there once a week too, Nick?
I've never been into one. I have never been to any sporting store. Well, not in the last decade. Let's put it that way. Anything I need, I can buy online.
Are you a black belt?
Am I what?
A black belt?
I am in olden days in Taekwondo, but now I do Muay Thai, which is no belts there, just bruises and cuts, and that's your belt.
All right, let's do Dick's Sporting
That's
Goods.
exactly how Joel trades too, just bruises.
In fact, I went yesterday to the doctor to make sure I didn't have a detached retina because I took a punch to the eye.
Ooh.
So back to Dick's, it's in the middle of the range. So from here, you have to watch out for shorter term triggers. And I'm going down. I posted a 2-hour or 240-minute. I'm trying to go down far enough to give you a trigger point. So maybe 36.90 was a trigger point for an upside bet to 37.50, which gets you to another trigger point for another $1 from there. So maybe it already crossed a bullish pattern that's already playing out. And if you get to 37.55, so you would already trigger another one higher. But if you take the daily, it's in the middle of the range, which means that you need to do homework to find out which way it wants to go. It's probably market dependent.
And how about Bank America here? Trading up 49 cents at 25.25. Boy, nice pop. Trading up nearly 2% with the SPOOs only up 1% here. What's your thoughts on Bank of America?
Okay, PE is 10-ish, and this is trailing PE, and it's price to book. So they're giving it no room for any bit forward business. So if they liquidate it now, that's what it's selling at. And this is a bank that is U.S. centric. So the fear in the banks, because they can't catch a rally, they can't catch a bid, is because of the inversion, the fear of the inversion of the yield curve. Because in theory, they borrow on the short terms and lend on the long term. So if the yield inverts, meaning the short, it costs them more to borrow short term than they can lend to us, why the heck they won't lend? So that will cause a recession, but also will cause less profits for the banks. So Bank of America, if I do a weekly, this is the only way I can really evaluate it. It looks like it could have a lot to go, but it is a pivot point. So usually pivot points are support zones. But if I combine it with the fact that it only sells at a 10 PE, I find it hard to believe that they want to sell it lower. So this is a hesitant put I would sell. Just because I say hesitant because the market wants to sell it lower. And I don't want to argue with them too much. So all the bank charts look the same, all the big banks and the XLF. So maybe you want to bet on the XLF altogether. Yep. Maybe I would rather probably buy an in-the-money call way out in time and sell calls against it to lower my entry cost than to sell a put below it, because of the threat on the overall markets. So if indeed that there's a big whoosh coming down, I don't want to be holding a lot of short puts. So maybe a longer term bet on the upside move in banks would be a better way to do it.
We've been on the line with Nick Chahine. He's the author of Create Income with Option Spreads. He joins the show every Tuesday to share his technical and fundamental outlook on the market. Nick, great job here. Thanks as always. We'll talk to you soon.
Great show. Great question. Thank you.
All right.
I lost track of time here.
It's okay.
Spencer.
It's
Why don't
okay.
you hit me aside the head? And,
Yeah, it's all right. But there's a couple of ratings I wanted to discuss real quickly as a pulpit chart of the SPY, because we talked about AT&T just being a super thick stock in terms of ratings and how they've gotten a lot of upgrades of late. The opposite is true for the stocks that aren't as covered, and you're seeing them to react a little more this morning. I'm referring to ACOR, Accorda Therapeutics, are catching a downgrade from Goldman Sachs to sell this morning. Goldman is, of course, probably the most influential of the investment banks here, but Acor getting hit on that downgrade. Also, CalAmp, CAMP, catching a downgrade from First Analysis. They're downgrading it from strong buy to outperform, but last I checked, it was getting hit on that news. So these stocks that maybe are a little thinner, don't get as much coverage, you can see them get a hit a lot more on a downgrade. Also, Pfizer catching a downgrade this morning from JP Morgan to neutral. Joel, any last words here? Thoughts on?
Man, I tell you, I would just I want to say that there's resistance here at 26.91. That's Thursday's close. That's 16, 17 handles from here. I don't know. I don't know if we got the gas to do it. 26.78 is your pre-market high. You also had to take about 26.83, as that's 100 points above the low. So another really little too quick of a rally for me to chase. On a pullback here, it'd be hard. I mean, I would love to see us get, 26.53, 26.55. That's mid-range on the session. But I think you're going to need a negative Trump tweet or some bad news for us to get down there. But Spencer, why don't you?
No Trump tweet of late. We had one a half hour ago, but nothing. I feel like he tends to tweet between 9 and 9:10. So I don't have any evidence.
If you are if you are shorting some of these issues that we've talked about, I mean, just keep an eye on the pre-market high, because a lot of times, you have a solid seller there. If it takes out the pre-market highs and stuff, you can expect a follow through on that. So, all right.
All righty. Yep. That's going to be our show for the day. If you missed any part of it, catch our podcast on iTunes, SoundCloud, Stitcher, TuneIn, and Google Play, or just rewatch our show on youtube.com/Benzinga TV. Thanks to all of you in our chat, both on YouTube and premarket.benzinga.com. Thanks to our guest, Nick Chahine. Please remember, all the information from our show is for informational purposes only and not meant to be investing advice. That's going to be it for us. So everyone, have a good day, and we'll see you on Wednesday.